Hello guys, I'm Mariano. This is an emergency video. I want to cover what's currently happening. Basically, you know that we have just crossed below 100k. Many people are panicking, people are running on the streets. And first of all, I want to make sure that you stay calm. We're going to look at this from the 4-hour perspective. I want to cover the implications of re-entering the previous range on the daily. We'll discuss whether the 1, 2, 3, 4, 5 breakout that we were forecasting thanks to the past performance in 2020 December is still in play, or are we doing some unrepairable damage at this point? Guys, if you like this type of content, make sure that you're subscribed to the Coin Bureau trading channel. I publish 3 videos per week in the channel. Together with Dan and Aaron, we cover all coins, education in crypto, trading setups, and everything. Make sure that you're subscribed. That is the first condition. But if you want to stay on top of my trading strategy and watch the almost 3 videos a day, I publish 2 about Bitcoin. And now in the past days, I started covering all coins as well. Make sure that you're also subscribed to the Trading Parrot. Since this is an emergency video, there are things that I won't be able to explain in full depth in this video. If you like the trading style, make sure you watch both channels to stay on top of the game. Alright, let's go very quickly. This video needs to go live in 20 minutes, so it's valuable for you and for everybody in the Parrot Army community. You can see that we had the breakout on the 4-hour and we reached straight away a level of 76. What we are currently seeing is a very aggressive retracement. This morning, I even say it, being in here, coming back for a retest, pretty much is gonna undo all the move of the explosive move. The good news is that we are still kind of in the last line in the sand here to still hold this and potentially continue going higher. Unrepairable damage is if we actually re-enter below this white line on the RSI 4-hour. That is RSI 52. And even if we break 52, I would like to see that we actually hold 46 as even a last final resource, just to give us another headroom. Of course, 52 gives you a more conservative retest. We already broke below the median, so we took a bullet. Maybe we accept 2. If you want to accept 3 and take the risk, then you have 46. The bottom of the range is at 35. That is, we have a full failure. That could be the target where I see this cool down in case we completely enter into the broken stage. From the point of view of the price, things are still looking decent. This is a very aggressive retracement back as a consequence of the very exaggerated increase in the open interest. This morning we talk about 35 billion in open interest, which is grotesque. And a move like this back down of 5%, believe me, is nothing. So far, we are still above this line that looks like a moving average that is currently representing the support of the RSI, which we are also, you can see, testing here at 52. Very decisive time when I'm recording the video. We have been already below it and we are currently holding it. On the price, we have support at 98.2, and then we have the top of this triangle that has a fair value gap that could attract the price next if we don't hold on the RSI. Remember, if we do something very quick and the price enters in here, it is allowed even to go beyond the triangle, as long as in the 4-hour we continue to close above that line, and then there is no damage. Wicks to the downside, to the upside are allowed. Closing candles below, it's kind of you put the last nail in the coffin and you just send it back to the cemetery, the whole setup. Looking at the daily, it is not looking great, guys. I talk about this potential scenario and I even talk about it as if it was a joke in the morning. In my video, I say this is a live candle. There is a very small chance that we don't end up doing what we did in 2020, which is after breaking out, having a few days of very small candles creeping up to the upside, and then we get a massively large green liquidating candle towards the first resistance of the CPR. The first resistance of the CPR this year is at 108K, and we talk about all this liquidity that is definitely worth attracting the price. It ends up at 108.5, which is consistent with getting to that level of CPR that we just mentioned. So far, we are seeing this rejection, and the only chance that we have of holding in here is that the reason that we are pushing this low at the moment, 5%, the only reason that I could accept as, okay, we can go back and continue consuming this, is that this liquidation was so big that it caused a cascade back down when it was forced closed. You can see that this liquidity pool is of 25,000. So a move of 5% or 6% is still normal after liquidating such a large amount. Sometimes it happens that the reaction after a liquidation is like the one that we are seeing. I'm just surprised that we ended up the move up in here and we didn't continue consuming that. So hopefully we are going to hold in here and we are going to continue going higher for the remaining part of the liquidity. As you can see, now we are below the triangle and we have 3 hours, 40 painful minutes to confirm whether we close below this triangle. By the time the video is out, you probably are going to be watching at the same candle. I'll keep an eye. If I'm still awake at that time, I will be posting on my Telegram channel if I get any updates. Otherwise, I will give an update early in the morning in my own channel as well. There are no significant moves from whales in here, so I don't see any distribution explaining this move. I just see over leveraged longs that are getting at the moment smashed by this unexpected move back below 100K. You can see a liquidation of a long of 18 million at 98K, and that is just a consequence that many longs went nuts with the level of leverage when they enter in here. So if we move out of the way this red liquidity that attracted the price to the upside, so if it's out of the screen, you're gonna see that this liquidity at 93.5 could be the one that is currently attracting the price for a very quick pinch up until 92.5 maybe, and hopefully it doesn't need to go up until 90 to punish the last long that entered aiming for over 100K. Those are the levels that are at the moment at big risk with big liquidations. After 90K, it starts slowing down until 88, and then we have another peak at 85, but with a big vacuum here in the middle. So if this accelerates, it could pinch that low 90K at some point, if that is the incentive that is attracting currently the price. Interesting, because in here it looks again almost like nothing relative to what we are leaving and taken on top of the table. On the long-term liquidity, we can also observe 86 to 90 being in yellow. That means that is larger than what we had here at the beginning of the pump. Definitely the delta are very overextended when it comes to liquidity pools. There is quite high levels of bid liquidity in here, which means that many people are placing limit orders below the price somewhere in this vicinity, I presume, aiming to buy this dip at 98K. Very much the opposite of the attitude that we saw in this area where we started rolling over with some sort of distribution. Then the longs enter in here, and now the longs remain more than the shorts in terms of bid versus ask liquidity. In the morning, we also cover the fact that if we get to the top of this channel, is quite a risky situation. We know that at those levels is when the longs become weaker and then the shorts starts coming in. And in this case, it hasn't been very different. Let's remove all my rubbish lines in there, and now you can see that from the point that it started selling is not very different, confirming that we form properly the channel for our alpha based on longs versus shorts delta on trading light. In the morning, I did make you aware that this is a risky area and that we need to be observing whether the longs are going to manage to confirm a breakout in here or if we are going to see a rejection. So far, this line is proving to still be a big resistance for longs to dominate and confirming that now we have a channel to the downside instead of to the upside, which is what we saw from August until November. And in the morning, we also talk about the liquidation of 99.2K being the most substantial to the downside. Let's cross fingers, guys, that is what is attracting the price and that the market maker doesn't want to put a local top that is going to last for longer in December, because that is really going to be painful at the moment to watch. We have gone beyond the 99K and now all these levels that seem elevated were less than the 99K. That's why this is being normalized and they're being shown as larger than in the morning. In the morning, we also talk about this low-hanging fruit, which is this fair value gap located from 101 to 99K, and we say that that is in confluence with the liquidation level. So far, we pinched that, and now we are leaving fair value gaps to the upside. There is still here 97 to 96K, another fair value gap that could be in play as well for the move down. After we run out of that, there is a huge vacuum until 85K. So let's hope that things stop right there and this is just a retest of the scene of the crime, which is something I probably say 100 times in my 30 minutes video in the morning. Very annoying to see that what I threw as a joke in here, careful, this is a living candle, now is playing out. I really didn't want to see this happening. I am not disappointed with the call because literally we called about this pump when the price was at 95K and it went to 105. So that's a 10K to the upside. We do swing trades, guys. So if you are protecting, as we talk about in the morning, your entry with a trailing stop loss, I also mentioned protect it in case it comes back down. If you did that and you listened, then you just locked in your profits in the morning and you shouldn't be worrying about this reversal in here. There will be new entries to continue going higher. Interesting because Bitcoin now is coming back down and the dollar as well. So really weird situation because normally they do the opposite, but they've been running together and now they are crashing together, which is absolutely odd. One speculation I have is that this is correction is because people are getting just too excited with the altcoins. Now we are at altcoin season 86 in the index. You can see some correction on the altcoins, but at the same time, the dominance hit our previous support, and this could be just the retest of the dominance hitting 57, just getting ready for another leg to the downside, allowing the altcoins to once again perform. If the altcoins perform too much, they take some of the cash from Bitcoin, which could be explaining as well the current correction that we are seeing. So let's wrap up things. On the 4-hour, we have the first line of defense. And at the moment, the RSI is below our support. So that is a yellow warning. We still have 3 hours, 31 minutes to close above an RSI of 52 to confirm that this is support. And ideally, we also want to close above this triangle on the 4-hour and start building some strong reactions to the top of the triangle with a big green candle showing that this was just an overreaction due to a liquidation of a large position, which we actually confirm is the case. There were some liquidations earlier in the morning with all the shorts, nothing as big as the long liquidation 18 million, but maybe all together hitting in here managed to cause this counter reaction. When it comes to orders, there's tons of orders buying the dip, which is currently holding the price for a few minutes. Let's see if this continues. But I will say monitor the 4-hour. That is very important. And what I will really love for today is we see that this is just a fake move, ideally. And I would like to see, again, the green daily candle to close above the level of 99.5. We definitely don't want to close forming in here some sort of double top with a close below 99.5, because in that case what the theory says, according to people trading volume profile, is re-entering the range in here should send us back to the bottom of the range, or at the very least to the point of control. The point of control is at 95.7 and the bottom of the range is 84.6. Let me know, guys, what you think in the comments. Was this just a fake out, or are we going to continue climbing for the rest of December? I also want to know what is your opinion. What caused this reaction to the downside? Was it the open interest, or is there anything going on in the news that you think might have caused this? Will be very interesting to hear from you. Guys, if you want to trade Bitcoin or altcoins, consider one of the exchanges I have in the description. Any of these links offer the best deals in all crypto space. As you can see with OKX and Bybit, I have 30k and 20k bonuses with the lowest fees. And if you want to go for an option without KYC, no VPN required, then consider these large bonuses on the top from 2bit and Bluffing. Thanks so much for watching, and I'll see you on the next one. Bye bye.